Hello, everybody. This is Joshua Hayes over at BigWaveTrading.com for your December 9th market wrap up. First, let's go ahead and start with the S&P 500. I want you to notice that today the market was down negative 2.3% and that the index is running into resistance right at this white line up here, which is the 50-day moving average. Now, the good news about today's down session is that volume was lower than the past two up days where volume rose each day. So it's a good sign not to see that the index did not get turned away at the moving average on higher volume, which would probably suggest that we can look to then go test the November lows at least. But since we did not fall on higher volume right at the 50-day moving average, I do believe that we will get above that average and possibly be able to test the 200-day moving average. Now, will we probably get to the 200-day moving average? Maybe not on this move. If we do, I think we'll probably come too far too fast and then have to backtrack. But that would set us up hopefully for the 50-day moving average to converge on the 200-day moving average. And then maybe we can get price above the 50, 200, which would bring back bulls into the market as a lot more fund managers would find it more of a tempting market as they would see the trend turn up on the long-term 200-day moving average. And I know some of you don't think that a lot of mutual funds use this, but more use it than you would actually think. They don't use it to necessarily as a point to make buys or sells, but they do use it to see if the indexes are above or below it, to see if they should be buying a lot of stocks or selling stocks. Like I said, not all do this, but a lot of the better ones do. So it's just good to know this. So, and like I said, until the indexes are above the 50 and 200-day moving average, we're probably not going to get any amazing longs that give us any huge return. So right now, we're just hoping that if we do pull back, we can continue to do it on lower volume and then continue to attack the 50, go over it on higher volume, and then we'll have to see what's there. Nobody can predict the future, and even if they do, they normally still lose money, i.e. Peter Schiff. Yeah, way to go. You got it right in 2006. But I do believe that I was telling everybody about a housing top in 2005. I know nobody listened to me, but if you go review my blog, you'll go see that I was talking about it then. That's when housing stocks started top. That's when the number one real estate investor at the time, I forgot who it was, sold all of his properties. So it's, I people can get predictions right all they want, like Bill Fleckenstein in 1998. But unless you're making money in the market, it doesn't matter. And I know not a lot of people are making money this year, but the people that have been going short this year and that were long from 2003 to 2007, were right. Now, in 2005, if you were predicting the end of the world and still going long stocks because the trend was up, now I'll listen to you. But if you're going short stocks when stocks are hitting new highs, like I had ERS go up 550%, Gigam go up 250%, and there were many, many others up over 100, 200%. FSLR even last year, DRYS 100% in a little over a month, and so on and so on. You have all these great stocks that still went higher and could have made you money. So all the predicting of the doom and gloom is great and everything, but the bottom line is you got to make money in this to have any credibility. But I guess if you're on CNBC, that counts as credibility to most people out there. However, most of you watching this hopefully know better and know the truth and know that it was better to predict this decline in 2006 while you were going long stocks that were moving up, like HRZ, 2007 AFSI, Tessa. We even had PDO and DGLY this year. I know it was a bad year, mixed year, but there were still stocks moving higher and making gains before all this turned really bad. And then those of us that went short and made money on the short side, that was the right play. Not predicting it going short. Now you're down 40% the last year and you're down 20% the last 2 years. Because, by the way, the best growth mutual funds for the past 24 months now all show losses. All of them have losses for the past 2 years. 24 months. Yeah, I got that right. And the only one that has a gain is this Gabelli fund, but that's an ARB fund. It's like arbitrage play where they work where the price is there, and that's not real growth investing. So as long as you have a 0% gain or higher since the beginning of 2007, you're beating every single growth mutual fund. So take that into account, some of you that have small gains the past 2 years or have small losses. You're doing better than almost every growth mutual fund out there, and you want to just be doing at least as well as the top 5%, because if you're not doing as well as the top 5%, you might as well give it to somebody else to run. So it's good that you have a better than 0% return. I hate to tell you, with stocks like AFSI, Teso, APPY, DRYS, FSLR, BIDU, and so many others. I just right now, I can go look. You can go look them up on your own at mauitrader.blogspot.com because I know I always post them there to make it a quick search. Or you can try to find them on bigwavetrading.com, a little bit harder. And you can see right there the proof, the evidence that there was money to be made in 2007 on the long side. And you could have been predicting the end of the world then if you wanted to, but unless you were going long stocks, you were wrong. So now everybody's right, but unless you're making money, you're still not right. And as far as I know, most of the people that got this right by predicting it correctly in 2006 are losing money this year. How did that happen? I don't know, because I have to make money living. So I can't afford to be 40% wrong. So let's just go ahead and get the rest of these indexes done. I've been on my soapbox. I've told you what I think, and I believe that everybody basically has it. So getting the predictions is great, yay! But unless you're making money, it doesn't matter. If Fleckenstein would have said the end of the bull market was going to end in a tragedy in 1998, but yet was still buying internet stocks and semiconductor stocks and other exciting computer-related stocks that were just producing huge, amazing gains, and including bank stocks that were just doing amazing in 1999. If you would have been going long stocks left and right, but warning that this thing's going to end badly, I tell you what, you were a genius. But if you're predicting it's going to end badly and you were going short the entire time the market was going up in 1999, I'm sorry, you're still not a brilliant genius. And then when it does tumble in 2000, and then you said, oh, got it right in 1998, but you were short and you were not long in 98, 99 when there were a ton of stocks making 500, 1,000, 1,500, 2,000% gains in the internet, software, semiconductor, computer hardware, bank sector, and many others, biotech. And it's just like, it's just hard to believe that so many people gave credence to these people when they weren't even making money. They just got their predictions right. So you got to make money. Now let's go do the rest of the indexes, which will just show you looks like all the others. Dow Jones was down 2.7% today. You can see failing right at the 50-day moving average like the rest. Good news is volume's lower. Same thing with the NASDAQ, as you can see. The NASDAQ down 1.55%. Failing right at the 50-day moving average with a tail, actually a bearish tail. However, once again, volume is barely lower, still lower volume after the two heavier volume up days. So the fact that it didn't collapse today and it's actually up 0.86% the past 2 days shows that the 600 still has some hope within it to forge a rally over the 50-day moving average and get us some long. But now let's look at the commodities. Let's see what gold did today. Gold was barely up, still in its uptrend. I'm going to get tighter on this. Silver was barely down, but still had a bullish tail on it, still in a consolidation area just like gold. And let's look at platinum. Same thing, slightly down, bullish tail, still looks like it's consolidating, and I see a lot of tails in this consolidation area between October and December, which really makes me think it's going to resolve itself to the upside. If I saw bearish tails, more intraday pattern on top than on bottom of the full body patterns, open bodies and closed bodies of these candlestick patterns, I would be more bearish in the consolidation. But since I got tails on the bull side, and I got so many bullish tails in this consolidation area, and gold's even moving up and having a lot of support, I got to be bullish, even though the stocks are in a downtrend. I wouldn't go short these stocks, index, futures. Even though these futures are in a downtrend, I would not go short these futures. And then the dollar, I wouldn't be long them, but I wouldn't go short. I'd just be looking to go long. The dollar continues to hold the 50-day moving average. It was up today 0.12%. Like I said, it's above the 50-day moving average. If you went long whenever it took out the 250-day moving average, you still have a 15% gain and things are still good. But you got to watch it because short term, it looks like that we have slightly lower highs here. As you can see, the trend line moving down a little bit. But at the same time, we have, so it's a little triangle pattern as you see here. Another one it's building. So we'll see how this resolves and plays out. See if it works like the other one. And then it'll tell you if you continue to hold dollar, if you got to take some more profits off the table. Let's go. Last one I want to look at is oil. Oil, like I said, I hope it goes lower, but that would mean deflation. And also, for the first time since 1941, the 3-month has a negative yield. That to me spells deflation. So if oil goes to 30, it wouldn't be good news, folks. It would be bad news. So remember, lower oil is good because it keeps the weapons of Iran from being built on a mass scale But lower oil also means the economy is doing horrible. So $40 oil is good for those that drive back and forth to work every day, but $40 oil also signals things aren't healthy. $30 oil to me would signal we're going to have some massive deflation. What a quick turnaround from July. This is Joshua Hayes of BigWaveTrading.com. Aloha.